Welcome back, everybody, to our event. I'm very happy to introduce the second panel, but before I do that, I just wanted to remind everyone that the Padlet that Ian had mentioned has now opened up 2 new columns for participants to write in any thoughts. So those are available for your thoughts. They're on the issue of financial institutions and subsequently on the issue of development institutions and their approach to the crisis. So please feel free to go into the Padlet and fill in your comments and your feedback. We're now at the second panel, and the panel session is now on agri-SME risk assessment and lending in the current context. We have a moderator who is Liliana Pozzo, who you can see on the screen now. She is the Sustainable Finance Advisory Services Manager for LATAM and Europe with the IFC. So Lilian, very happy to have you on board, very excited about this panel, and over to you.
Thank you, Frank, and thank you everyone for joining. It's my pleasure to be moderating this panel. And I think it's a perfect segue how we ended the previous one of what Ian said around, okay, we've heard from the actual agri companies, and now how can we support from the financing side these companies address all of the challenges that we're seeing at the moment, which are greater than we had anticipated. We really didn't anticipate post-COVID. You know, we thought probably COVID is the biggest hurdle we will be facing in our lifetime, and then yet again, right after we are facing this war in Ukraine. So it is my pleasure to introduce our first panelist, Dr. Prasun Das. Dr. Prasun is the Secretary General of APRACA, and APRACA is the Asia Pacific Rural and Agricultural Credit Association. So welcome, Dr. Das, and thank you for joining us today. I wanted to ask you, I mean, APRACA is a let's say, an association of various kinds of institutions. And as far as I know, you're present in 20 countries and have 80 member institutions. So you have quite a footprint and a big mission, let's say. So it would be interesting to hear from you on how the war in Ukraine has affected your end, let's say, beneficiary client, the agri farmer, the agri-SME, and how APRACA, with your muscle and presence in the region, how have you responded? Thank you.
Thanks. I think I'm audible.
Perhaps you can put your mic a little closer to your mic, Dr. Das. Thank you.
Is it okay, or I leave it?
Audible now?
Oh, much better. Thank you.
Okay, thank you. So thanks for this introduction. Actually, as APRACA being present in 24 countries in the region, because it's a regional association of the central bankers and the development financial institutions, which includes also some of the commercial banks, big size commercial bank like Agriculture Bank of China, State Bank of India. So they are very big in size. Now, what we have seen that there are 3 kind of impact actually happen. So the most of this the Asian the financial system currently, the liquidity even during the COVID period, liquidity was very high in the system, and having a high liquidity and low demand, it has actually changed the matrix of the assets and liability management in the banking system, which are really directly impacting them for their short-term lending portfolio. So it has impacted to the short-term lending portfolios, and because as you rightly said, that it has loaded with the immediately after the recovery phase of COVID-19. So most of the banks were actually preparing their COVID-19 recovery recovery approach along with the government. At the same time, these things have come, and this actually changed the whole system. And we are all of, I mean, we did a short survey which shows that the quality of portfolio in agriculture has not that changed much, but in the SMEs, yes, it has got a real change. And those who are the high level SMEs, those who are involved in only with the market which are already value chain are very tight, they are only getting short-term lending. But for the long-term lending, the retail lending has already been almost reduced significantly. So these are the major three. I should say there is a three-pronged impact happened in the system. One is that liquidity has changed the liquidity. Second is the portfolio, and the third one is the climate focus. So most of our banks were actually focusing the climate resilience of late, but now they're focusing more on the productivity, and the climate focus has been taken a backseat. Thank you.
That's quite unfortunate, actually, that the climate focus has taken a backseat. So from your perspective and just the role that you have as an institution, what type of action would you expect to see from the international development community? What have you seen in terms of response? And we've seen a lot of COVID response, and I don't even want to jinx it by saying we're in COVID recovery because it keeps coming back, right? But we're in COVID recovery, but entering into a new kind of Ukraine war phase. So how do you see the international community responding? Thank you.
Right. No, that's a huge question, like how the international development organizations or the agencies will respond. Yeah, I mean, for last 5 months, everybody is trying to respond based on their best effort. We are also trying our best along with our member institutions. So what actually we found that there is a requirement of requirement of support. So for the national and the domestic banks, because we are talking more about the domestic banking system, which has impact, which was impact, because the commodity, gas, fertilizer, oil price, all are related to the inflation. So that inflation part is being taken care by them. Some of the domestic banks are doing well, but majority of them need some kind of support, maybe short term or long term, depends on how long the war will continue, and to reduce their cost of financing, which is most important. The second part is the maintenance of the liquidity. Now the liquidity is high in the system, so the banks need to find out the way to invest in some of the high return or low risk business, which we need to identify. I mean, the IDOs, the International Development Agency, need to support to identify. The third one, we also, through our survey, we found that we need to provide some stimulus. Now, what kind of a stimulus? We are talking some of the stimulus like reduced interest rates and also guarantees. So some of the stimulus required, which will actually expand their lending portfolios. And finally, I must say that which is most important is stabilizing the foreign exchange market, which in Asia, this part of the globe, we are really impacted on this the foreign exchange rates. Today, if you see Thailand, they have a foreign exchange rate in 4 months' time. The increase is almost 16%, which is very, very high. And I know all the banks are facing the heat of that. Thank you.
And one last question, Dr. Das, because you mentioned liquidity in terms of impact. And I think during COVID and now during the war, liquidity is really the result of a credit crunch, which is related to a financial institution's appetite for risk and therefore on lending. And so this directly affects local, agri-SMEs in that they're facing credit constraints because banks are pulling back. They pulled back for the last 2+ years, and now they continue to pull back. And then the effects of the war have resulted, as you rightly say, inflation, rising fuel prices. So the cost to produce for a farmer is higher, whereas they have a credit constraint that that started 2.5 years back, right? And is in no way ending. So my question to you is, how do you see this is going to affect, or how to better mitigate? Because I guess we're looking at it from a financial institution's perspective, that it's kind of a normal reaction, but the domino effect on the end farmer is quite grave. So is there something that you are putting in place around supporting farmers? You mentioned, guarantees, etc., but that could help them, I don't know, get access to export markets, other ways aside from the credit that could help farmers grow, etc., or actually continue operating given the current situation. Thank you.
Oh, thanks a lot. Because Asia is again subdivided into 3 major sub-regions. One is South Asia, one is the Southeast Asia, another is the East Asia. So all these sub-regions have their contextual issues for this particular war situation. And South Asia, they are a little bit better in terms of the food availability, but definitely Southeast Asia is little bit in lacking to that. So the question here is that whether we'll have a similar type of situation for all the sub-regions. Answer is no. We have our own sub-regional discussions and conversation, where we found that, for example, in case of Southeast Asia, we are talking more about the corridors, like the more economic corridors to be opened to all the countries, those who need immediate support in terms of food, for example, Myanmar in Southeast Asia. So these are the dialogues are going on with our partners and banking system, that how they can support these type of corridors. For example, in Laos and Thailand, we have opened the corridors for financing even to the farmers in Laos from Thailand by one of our member institution, BAAC. So these type of dialogues and the conversation are going on, which I mean is not a very high impact, but with a limited impact. But when we start piloting, we see a lot of interest among the people. So might be it will take some kind of scaling up in future. Yeah, thank you.
Thank you so much, Dr. Das. So now it's my pleasure to introduce Hussein Abou Bakr. Hussein, thank you so much for participating in today's panel. Hussein is the co-founder, I believe, and CEO of Macharia 3, which is Egypt's first agri-fintech. And you launched into 2021, I understand. So, it would be good to hear from you. You launched right in the middle of COVID, so there was definitely an opportunity to be sought. Really interesting to hear how you approached it, introduced Macharia 3 into the market, and now as you're growing, how the effects of the war have affected you, where it's my understanding that the grain prices caused by the war is severely affecting the Middle East, including Egypt. Thank you, Hussein.
Thank you, Lilian, and everyone for this opportunity. Do you hear me? Do you hear me well?
Perfectly, thank you.
My name is Hussein Abou Bakr. I'm the co-founder of Macharia. Macharia means small farmer in Arabic. It's the first agri-fintech platform in Egypt and probably in the Middle East. We launched in the midst of COVID. We say that Zoom or such platforms exploded in growth during Zoom due to the change in people's lives habits. And we believe the same thing will change in the way small farmers communicate and transact, whether it's financial transactions or trading or commercial transactions. And that's what's exactly what's starting to happen. There's negative consequences for what's happening in the current perfect storm, and there's also opportunities and positive outcomes. So the threat is climate change, war, and disrupted supply chains. The result is food security issues in some parts of the world, and misplanning of and matching of demand and supply. So in some countries, you find that there is food that is thrown and there is no consumption and use for it. And in other countries, there are riots for the lack of basic needs. So the only way, or the opportunity is, the only way to to bridge this gap is through utilization of technology. The same thing exists in finance. So now, as my colleague, Dr. Prasun mentioned, there's a lot of liquidity in the system, but it's not being utilized because of the high risk and the inflation rate and the FX situation. The only way to mitigate this is to have a profiling system and the KYC system that spots out the need and the opportunity. And everyone agrees now the importance of food. If you see what's happening in the Netherlands today, the power of the farmers are on the ground. Today, the farmers stopped transportation and stopped the functioning of a whole country, one of the largest 3 agricultural countries in the world in terms of technology. In the Netherlands, farmers are unhappy. So you need to be reactive, and you need to understand the needs, and you need to respond quickly to the needs of the farmer, because they know that they deserve to be helped and supported to feed the world. So it's not an option now. I think it's a mandate. And what Macharia does is that we're a platform that connects small farmers to off-takers and match the demand and supply through digital contracts, digital trading contracts. And upon the existence of those contracts, we provide tailored financial products through embedded finance, where we give the farmers seeds, fertilizers, and pesticides to help them grow these crops under good quality and without having a cash burden. So they don't use cash. When they produce their harvest, the financing is deducted from the value of the crop, and they receive the balance in their electronic wallet or their card or their wire transfer in their accounts.
So are there any plans, Hussein, to expand outside of Egypt throughout the Middle East?
Egypt is a large agricultural company in terms of segregation and fragmentation. Egypt is the second most fragmented farmland after India. And we have around 8 million farmers. So I think this is the 6th or 7th largest farmer community in the world. So it will take us a year or two to master what we're doing in Egypt. Yes, we're talking with other partners in other African and Middle Eastern countries, but we're in the phase of scouting and productizing and choosing particular projects. For example, if a major off-taker in Egypt needs sesame seeds, there are sesame seeds in Sudan. So we're talking with Sudanese partners who have access to farmers who are growing sesame. So it's project-based, product-based scouts. We cannot introduce all the services because it's not. We're still developing the products. We're only 1.5 years old, but we're growing fast. But everyone wants to help. Everyone is excited about what we're doing. But I think it needs some time to mature.
Thank you so much, Hussein. So I think key messages from this panel is, I mean, the effects of COVID and war are resulting in food insecurity, let's say. On the financial institution side, there's a credit crunch. Therefore, there's a lack of appetite, which has resulted in high liquidity of financial institutions. And then this is directly affecting small, medium, and large farmers, quite honestly, because we have supply chain disruptions, lack of access to credit. And you, Hussein, have found an opportunity, let's say, in this unbalance or this chaotic result of COVID and the war, and have been able to address that credit crunch directly in Egypt with these small farmers. And hopefully you'll be able to expand that and create kind of a replication effect, hopefully, where banks can begin to again understand the importance of technology, as you rightly said, because I think the world has changed. Digitalization, it has always been important, but now is really in the forefront around meeting the financial needs of low income segments, whether it's a small farmer, whether it's a woman micro entrepreneur. So big challenges ahead of us. And so it's interesting to see both your perspectives in the sense that you, Dr. Das, are working in a sub-regional and, you know, very large markets like China, like India, where you divided it into 3 sub-regions within the Asia Pacific. And of course, it has to be a very localized response, as you also said, Hussein, as to what are the realities of the small market, of the small farmers in our market. How do we support them in addressing these financing gaps, and hopefully encourage the big players to really address their risk appetite constraints to find, maybe through technology, as you said, Hussein, a better way to mitigate risks and address the financing needs of these small farmers. Oh, I see that George Macharia, General Manager for the Food and Agricultural Banking Unit of Equity Bank, has joined us. Welcome. Thank you for joining us. Perhaps just if you could describe from your perspective how Equity Bank is addressing the needs of the small farmers in Kenya as a result of the changes that have occurred, let's say, over the last 2.5 years as it relates to COVID and the war in Ukraine. Thank you.
Thank you very much. And my apologies, I had a problem with some issues with network. So I have.
You arrived just in time. No problem.
Thank you.
Perfect
Thank you.
timing. Welcome.
Thank you for your understanding. And I'm happy to respond to your question. Just as an introduction, as you have just said, Equity Bank is it's largely a bank that has a lot of interest in farmers and smallholder farmers, for that matter. And we've been working with the smallholder farmers for quite some years. But just to respond specifically to what you've just asked, for the last 2.5 years, of course, it has been quite a challenge with the smallholder farmers. Basically, not just in terms of the production that has been as a result of the pandemic, but also several other aspects that have changed over time. One of them being the issue of climate change, and of course, as most of those who may have operations in East Africa would appreciate that there were some issues with deaths at locust within the same period, which has really affected the smallholder farmers, and some bit of prolonged drought that has also affected them. That said, of course, there are a couple of interventions that Equity Bank has tried to do to be able to cushion these farmers. And one of the areas that we have actually done is to enhance our support for what I would call conservation agricultural practices across smallholder farmers. And besides that, trying to help them to be able to institute, they establish irrigation within their small plots. Of course, when it comes to irrigation, that has only worked perfectly with the farmers who are within water catchment bodies, rivers, and some who have been able to establish shallow wells, because majority of the smallholder farmers that we serve may not have the capacity economically to be able to establish, mechanically sunk wells or other boreholes. And so most of them, what they do is to sink shallow wells, which are done manually, and therefore they are able to meet that cost effectively. The other thing that we have done, and I would say we are still testing it because it took a bit of time before we could be able to do this, is to introduce to them, and especially for the support of conservation agriculture, crop rotations, because majority of the smallholder farmers we've been working with for the years have predominantly done what I would call monocropping, and that has really depleted quite a lot of their land. But for the last 1.5 years, which I would therefore say is within the period that you have actually alluded to, Liliana, is that crop rotation has become very key for us, and we are doing this by introducing players who are able to offtake the commodities that we are introducing to them, and largely it is leguminous crops and oil crops to be rotated with grass crops that they have been doing. We have a large composition of farmers who do a lot of grass related crops, maize, wheat, and sorghum, and those are the ones that we have really focused on to see how they can be able to do that. Lastly is also introduction of support for short crop financing, value chains like horticulture specifically, and with a lot of focus on the potato, which is actually at the second most important staple in the country. So we've looked at the regions that have been predominant in production of potato and tried to see how we can be able to support these smallholder farmers, because it's a short crop and therefore well surfaced, it becomes something that would help them to create sustainability. And we have done this using partnerships, and maybe later on we can speak to that. Thank you. Back to you, Liliana.
Thank you so much, George. And I have one final question for you. We were talking previously about the increased liquidity in the banking sector, really as a result of an increase or a decrease of risk appetite, particularly towards the small farmer, right? So my question to you is that, have you seen that at Equity Bank? How has your portfolio grown, or are you seeing that credit crunch in terms of the bank's own risk appetites, or are you still operating pre-COVID times around portfolio growth and your growth strategy overall in the sector? Thank you.
Thank you for that question. I will answer it in two folds. The first thing is that, again, and it's a good coincidence, over the last 3 years, as Equity Group, we've been trying to refocus our strategy. And we've identified a couple of areas of focus or pillars. And actually, we in the course of this year, we launched what we are calling the Africa Recovery and Resilience Plan, which is a strategy that is actually meant to support the client base that we are working with in being able to bounce back into the performance in their businesses. That strategic plan, or that Marshall Plan, focuses largely on 6 items or 6 areas. Food and agriculture is one of them. Then we are focusing on manufacturing. We are focusing on the growth and support of MSMEs. We are focusing on digitization of finance. And if you look at those, especially if I would look at those 4, combined with the fifth one, which is social impact investments, what you realize is that all of them have a component of supporting smallholder production. Now, why do I say this? If you combine the first pillar, which is food and agriculture, our focus is actually on primary production and what we would call extractive, production, or rather extractive industries, but largely agriculture being with the main one, which we target to do 30%. So as a strategy, therefore, you realize then that means there are less recalibration of our risk appetite towards agriculture. But then for us to be able to cushion the bank, we bring in manufacturing so that then we can have off-takers who have capability and capacity, or that we can be able to support in enhancing their capacity to be able to take the raw materials from these smallholders and then convert these raw materials by value addition their manufacturing level, so that then there is sustainability of market for the smallholders. So mainly, of course, it adds a shilling or a dollar to anybody who buys the raw materials and adds value through processing and manufacturing. But most importantly for us, it gives us some comfort that the smallholders that we are growing will always have a sustained offtake market. That is a key recalibration that we have done within the bank. And so to answer your question first is that our risk appetite has grown. Now, effectively, what then that has meant is that as a bank, we have started onboarding quite a lot of SMEs and upcoming large enterprises who are in value addition and agro processing, and thereby impacting on portfolio growth. So in the last, therefore, that period of the 2.5 years, 3 years, we've actually seen quite a significant growth. But of course, going by the Marshall Plan that we have, I think we are supposed to actually to step on the acceleration pedal more, because we have actually given ourselves as a group a 3-year plan to be able to scale up those interventions. So yes, I'll confirm that it is something that is that we are working with, and we are continuing to see how we can onboard more partners who can be able to work with us, particularly when it comes to issues that would support, or initiatives that would support risk mitigation, that would not force us to draw back or to withdraw from the goal that we have looked at. Thank you.
And I know I said that was my last question, but I have one more. So, we were also mentioning that climate resilience or climate smart agri, for example, could be suffering as a result of the situation that we're currently in. So given that you've indicated that Equity Group has strategically decided to continue to grow in this space with a very comprehensive strategy, as you've described, which includes social impact, and does that include ESG in terms of environmental, in terms of helping farmers adopt climate smart agri technologies, methodologies, etc.? How are you embracing or working towards that as an institution with the small farmers? Thank you.
Thank you. I think that for us has now almost become a hygiene factor. And I will elaborate why I'm calling it that. Not that I'm undermining it, but I'm saying this because even before we came up with these initiatives, within the group we have a foundation. We call it Equity Group Foundation. It's been there for long, almost 15 years. And one of the pillars that we introduced within Equity Group Foundation about 7 years ago, I think it's about 7 years ago, I need to check, but it's about there, was a pillar that takes care of renewable energy and environment. It's a pillar, and within the commercial engine of the group, that is the banking subsidiaries of the group, we have created it as a business unit. What then that means is that we are trying, and we have been doing this, engaging players both at the value addition level and also smallholder producers, but also even cutting across all other sectors, real estate, transport, and so on. But most importantly, to address what we are discussing here, within that pillar, we engage smallholder farmers through the foundation by building capacity and showing them and training them why it is important for somebody to be able to plant trees on their farms, for example. Why it is important, if I'm a dairy farmer, to be able to establish a biogas digester within the farm. What are the economic benefits, but also what are the benefits towards the environment? Talking to the value addition companies like dairy processors and telling them, if you can actually be able to tap on the power from sun during the day, you can process your milk, and you use less of power from the grid at night to do packaging of what you processed during the day. But then the others on the flip side realize that for them to be able to achieve this, they require financing. And therefore, from the foundation, they are able to seamlessly be introduced to the commercial subsidiary, that is now the banking subsidiary of the bank, to be able to get financing to establish these solutions. As I have said, even in the recent past, besides now those solutions that are capital intensive in nature, bringing in climate smart agriculture for us, we count that as a very important component of preservation or conservation of our environment. And the last one, which is not necessarily squarely speaking to agricultural clients only, but largely related, is where the bank has also pledged to support through using the networks that we have within the group to plant 35 million trees within the country within 5 years within 4 years up to 2025. No, 5 actually, because it includes 2021 all the way up to 2025. And how we are doing this is to go to institutions, either learning institutions, government-owned institutions, or the private sector institutions, and asking them to provide to us a space, laddered space within your compound, where we can be able to donate trees and plant trees to you. So every rainy season, which normally happens twice every year in this region, we are able to donate those trees, and we send our teams to go and work together with those owners of those institutions to plant those trees. So we believe that all those initiatives will definitely be able to help us across there. But also the final one is that we also have created a department that is specifically focusing on what we call environment and social risk management, which is a standalone department, to ensure that all the applications, credit applications that we are receiving, particularly for MSMEs, can go through or are going through that DD on ESG to ensure that they are well compliant. And we believe that with that, we shall be able to achieve quite a bit in protecting our environment. Hope I have answered your question.
Yes, you definitely have. Thank you very much for being so thorough. And I want to thank the three of you for joining this panel. And I think we got a very good comprehensive view from different kinds of institutions. So a sub-regional institution in Asia Pacific, a large bank, a regional bank in Africa, and then of course a fintech working in the agri space from the Middle East. So very different approaches. I think all of you are playing a very important role. And I want to thank you again for your time today. And I hope our audience has enjoyed this panel. Thank you very much. And back to you, Ina.
Hi, well, thank you, everybody. We've been keeping track of some of the ideas that came through in the Padlet there. There was a full range of things, from the kind of more macro level things around maintaining liquidity in the system and providing stimulus, down to the very kind of concrete and targeted fintech solutions and the sort of lending to smallholders that is supported with sort of thoughtful capacity building alongside that. One of the other range is really striking to me, the context specific needs, both, you know, from financial institutions sitting in different places, but also the very different geographies and how they're needing to adapt to, you know, make their local food markets work in this time. Yeah, in terms of bringing in some kind of SME perspectives, I actually want to turn, I think I'm actually going to take a minute to ask Nouran and Nakisa, just to give quick responses from you. You've both put in interesting comments. Just want to bring a quick SME response in right now. So actually, Nouran, you've been hearing those comments. You're in the middle of trying to make your business scale. Do they speak to you? Is there anything else you would add in there?
Well, of course, yes, because the fact that we're now trying to focus on enabling growers to become a little bit more resilient, whether by focusing on looking at local production or supporting them to finding the right markets. All of this is great, but what I really, really hope to see more of is more of a more holistic approach, if I may say. In the scientific realm now, we're really focusing on nexus, for instance, technologies that basically balance between the use of energy, water, and food production. So, and I think this is kind of the link that is a little bit missing from the financial sector, or the link that is kind of not there yet. Because I think this will unlock the solution to so many challenges that we're facing now by the introduction of the right technologies. I think the right move would be to conduct high-level studies on what the gaps are and how the available technology could actually address them. But I think we're going to be getting there very, very soon with the efforts that are taking place on the ground. So. Hopefully we'll see more facilitation to this area, basically.
Thank you. And Nakisa?
Thanks, Ian. I think one of the critical things that I've dropped in a comment is about de-risking lending, and also just getting smallholder farmers especially to purchase the right inputs and utilize them in a way that is more efficient. Currently, there's a push towards balanced nutrition. So the agenda of, just having farmers get financing and purchasing inputs from agro dealers without really understanding the kind of nutrition or the kind of, parameters that are missing in their soils, and, trying to look at soil health as a holistic, approach. I think this is one thing that probably financiers, both banks and MFIs, need to start looking at. In the current era where we are looking at also, I know Equity has mentioned about aggregation, supplying the markets. And the only way we can get smallholder farmers to produce economically is if we understand what kind of target yields are we looking at when we are looking at smallholder farmers. We know the current challenges that are there I've mentioned about climate change. We know the current effects of climate change on smallholder farming. So we need to try to look at, soil health first. Currently, we are looking at about 45% of yield loss that is attributed towards to soil fertility related issues. So we need to look at how do we then tie this into finance so that we can de-risk finance and still make an impact and make farming profitable for the smallholder farmer. So I think it's time to look at it holistically. Just as Nouran has said, we need to look at water, energy, all those efficiencies, and it all starts with the soil. If we cannot look at the soil as the holder of those nutrients efficiently, if we cannot look at it as, a carbon sequestration, in terms of carbon sequestration, then I think we might just be contributing more to carbon emission than being part of, just that whole cycle of carbon. So thank you so much.
Fantastic. I mean, it's fascinating to hear you two in a way echo each other. I mean, what I'm witnessing here, I think from an SME perspective, is SMEs are driving this transition, which is being accelerated by the Ukraine war, to more localized, more regenerative, more resilient food production, and that finance is going to be absolutely important to kind of get behind that transition. And both, I mean, it's great to hear what those financial institutions are doing, and I almost want to say this is the time to accelerate that. Like, you know, as the SME community is moving here, let's get behind it. You know, I heard, George, you said you've got a 3-year plan. Can you deliver it in 2 years? Let's go. And as you do that, you know, let's see, let's avoid building further systemic risks into the place by degrading soils, when actually we can be financing the agronomic practices that will actually increase the resilience, sort of enhance natural capital that's so important to the way actually a whole fish system's going to maintain being productive and profitable for all of you that are making it happen. So thank you so much. Let me hand back to Frank.
Thank you, Ian, and thank you, Liliana, for a wonderful and very interesting panel.